Thank you for joining us to our live webinar on mastering Micro DAX Future. This is Eric Lee. I'm a sales director with Phillip Futures. In today's webinar, we'll be discussing about the trading of Micro DAX Index Futures. Before I begin, I would like to do a sound check. If you can hear me loud and clear, just type yes into the question box. Also, during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. So great, looks like everyone can hear me clearly. So let's begin with tonight's webinar. So just a quick disclaimer before we begin. Just take note that some examples shown here tonight is for illustrative purpose only. It does not construe to any investment advice. A little bit of introduction of myself. As I mentioned, I'm Eric Lee. I joined Phillip Capital in 2004. Currently, as a sales director with Phillip Nova. So I have close to 20 years of industry experience, and constantly I'm conducting webinars and seminars, and also meeting my clients on a one-to-one basis to sort of educate them about the market, and also to share about some of my analysis methods and about my view of the market. Yeah, so just a quick presentation scope of what we're going to go through today, like introduction on the DAX and also on futures, and why you should use futures for trading, and I'll be sharing about some factors affecting the movement of DAX Index, and also go through with you development process of how to set up trading strategies, in particular also for Micro DAX Futures. And towards the end of it, I'll be giving a little bit of explanation on the simple trend following strategies that you can use for DAX, right? And then towards the end, I'll be sharing about some of our latest promotion and the service I provide, and we'll go through the Q&A at the end as well. Okay, so let's begin. Introduction to Micro DAX Futures. So, but before we touch on the product itself, as in the index itself, I'm just going to give a very quick introduction about futures trading for the benefit of those of us who are very new to this. You have not traded futures before, right? So basically, futures is a contract, right? It's an agreement between the buyer and the seller to trade on a commodity. And of course, when this product first started off, is a product that is created for farmers and for companies, commodities companies, to deal with those commodities products, to trade in them, so that there will be a market that they can easily buy and sell this product from. And so, of course, by commodity, I meant those are hard commodity or soft commodities like metal, gold, like wheat, sugar, rice, and so on. But of course, nowadays, futures products, there are a lot more products apart from the commodity itself. And we also have financial products like what I'm introducing today, which is the German stock index, DAX, right? So, and of course, is more popular among the investment public, trading in stock index futures rather than just trading in commodities futures, right? So in the past, the main purpose of trading futures is meant for hedging. So it is to hedge the risk of the farmer, and for the companies like, for example, Starbucks, who needs to buy huge quantities of coffee beans and milk and sugar yearly. So it's for them to hedge the risk associated with such commodities products that they are purchasing. So, but nowadays, of course, it's more used for alternative trading or for speculations. So people who have a view, people like you and I, who has a view about the market and whether it is bullish or bearish, and then we then participate in the market with our views, right? By if you are bearish, you then sell first. If you are bullish, you then buy it. And in the past as well, futures trading is done in the open outcry system. It's a little insert that you can see here. People crowding around in a room. So I think this open outcry system has more or less gone the way of the dinosaur. So probably there's still a couple of them around, but most people are doing electronic trading now. What I've shown you here is our Phillip Nova trading platform. So this is just an example of how trading has been done. Probably like 95% of the time, right? It's being done electronically on a PC and more commonly on the phone now. Okay, so why then should we trade micro DAX futures? Okay, so first of all, not just on micro DAX, but in market in general, we can trade futures because it allows us to trade whether it is in a bull or the bear market, right? So traditionally, when we talk about investing, especially stock investors, they are very much used to only one side of trading, meaning to buy low and sell high. So when they met market that is maybe range bound trading in a sideway or market that is coming down, they either stay out or they just have to bite the bullet and go through the process and just wait for the bull market to come back again, and then their assets, their investment will start doing well again, right? But for investors or traders I'm like myself, right? We have other means of trading, right? We have other avenues to participate in. So that is that if the market is range bound or if the market is going down, you can then participate by trading in products such as futures, right? Because in the range bound market, right, of course, the range must be big enough. You can then trade it on the upside and the downside during the ranging period. And if when the market is on a downtrend, you can also, in the bear market, you can also sell first, right, at a higher price. And when it goes down, then you buy back at a lower price to make the difference, right? Futures also allows us to participate in the global market, right? So DAX Germany is one of it, but more popularly, people also trade in futures products from the US, like the S&P, the Dow Jones, the Nasdaq, right? In Singapore, people trade the MSCI Singapore, right? And then in those who are interested in the Chinese market can also gain access through the product from the Singapore Exchange, SGX. You have the FTSE A50, right? Taiwanese, Japan market, the Nikkei. So it becomes easier, right, for investor because we read the news, we follow the economic news that is going around. We know, like for example, we know that inflation is coming down. The interest rate is high, but it has stopped advancing, and the next step, the interest rate got to go for most economies will be like is going to plateau and then followed by coming down, and how that will impact the stock markets, how that will impact the stock indexes. So if you form a view on that, you can then participate that view by trading in the stock index futures, right? So you need not go into the individual stocks to study their P&L, to study their balance sheet, and then out of the, say for example, if you're interested in the US stocks, S&P 500 is made up of 500 blue chip stocks. You need not go through the 500 stocks and then to decide on which one to buy in or which one to short at, right? You can just participate your view in the macro market on a single product, which is the S&P. So in this case, today's seminar, we are looking at the German DAX index, right? So if you have certain view about the European Union, you have a certain view about how the Germany economy will do, and then you can then participate that view by trading in the German DAX index futures. So futures product is also well liked because of its low transaction cost. And I say this in comparison to traditional investment product like stocks and like bonds, right? Okay, so now let's touch a little bit on the micro DAX index futures. So basically, if you want to trade in the German DAX index, there's basically three products to choose from, and they are all the same in the sense that they track the same stock index, which is DAX, right? Composed of 30 to 40. I think now they change it to 40 stocks, right? Of these German blue chip stocks in that is in the excuse me, in the index itself. So depending on your trading size and your comfort level, you can choose between the regular size DAX, the mini DAX, or the micro DAX. Right? So and the micro DAX is good, right? Especially for beginners because it's the smaller size available. 1 point of the DAX movement is only equal to euro $1. So in comparison with the regular size, whereby 1 point is equal to euro $25. Excuse me. So as a trader, we can it's similar to like going to school, right? You start off with the basic in what we learn in the primary school, then you move on to the secondary school, then the JC and the university. So as a trader, before we graduate in terms of our competency to be able to trade the large regular size DAX index, we can start off right baby steps by taking the micro DAX, right? So the daily average range for the DAX index is about 150 to 300 points. So if you are trading on a micro DAX, right, this works out to about 150 to 300 euro on a daily basis. That is to say, if you don't do any analysis, right, you just maybe you just buy when the market open, and then you just sell at the market close, and just so that day is a upward moving day. So the market move up 300 points for the DAX index. So 300 points, if you buy the micro, will be $300 euro gain, right? If you trade the regular size, will be 7,500 euro gain, right? But of course, the opposite may happen too, right? If you were to buy at the market open, without thinking, just buy at open, sell at the close, but it's a Dow close day. So meaning that the DAX will probably drop by 300 points. So that day, if you were to do that, you will a trader trading a micro DAX futures will lose probably 300 euros, and the one that is trading the regular size one will lose 7,500 euro, right? So of course, I'm listing the extreme, right? Because many a times we are not going to buy the low and sell at a high or vice versa, right? Most of the time we'll probably be able to capture the in between. So probably somewhere between 100 to 150 points of movement, right? So thereby, by using a smaller contract like a micro DAX, it then allow us to learn, right? To get used to the market movement, to learn and to prepare ourselves. And once we are able to overcome it, get used to it, formalize a system that works trading on that contract, you can then decide to either upsize by trading more than one lot to two lots, or by moving on to the mini and then subsequently to the regular size. Okay, so just go through some examples of how you calculate the contract size for micro DAX futures. Right, the contract size or the contract value for the micro DAX futures goes like this, right? It's equal to 1 euro per index points multiplied by the index points traded. So say if the DAX index is currently trading at 16,000 points, so the contract value of this futures contract that you purchase or you sell is equal to 16,000 euro. However, futures trading does not require you to pay up in full, right? It's unlike you buying a stock. When you buy a stock this way, you need to pay up in full, right? But when you trade futures, it doesn't need so. You only require you to put in a deposit. Sorry for the spelling for the error here. So it's not micro Dow, it's micro DAX, right? So for example, the micro DAX initial margin is euro 1,573. So approximately 10% of the current contract value. So that means that in order to buy one contract of the one contract of the micro DAX futures, you only need to fork up with 10% of the contract value of the contract size. So that gives you a leverage of 10 times, right? Your amount that you put in has a leverage for the margin, has a leverage of 10 times. And how do you then calculate the P&L, right? The profit and loss. So the formula is you use the index points, you gain or loss, and you multiply by $1 per index point. So remember, this example that I use is based on micro DAX index futures, right? So if you are trading the mini DAX, you need to change the dollar size from euro 1 to euro 5. If you are trading the regular DAX, you need to change the formula from euro 1 to euro 25 per index point, right? So let's go back and then use the micro DAX as example. So the minimum price fluctuation of the DAX futures is 1 index point. So it moved by 1 point, which is equal to €1 in value, right? So depending on what futures contracts you trade with, please note that this will differ, right? So not all futures product will move in 1 index point. Some move in 0.1, some move in 0.25, right? Some could even like be moving in 5 points, right? Like so, it all depends. Like for example, Nikkei, it moves in 5 points. So different products, you need to understand their minimum price movement. You need to understand their margin. You need to understand their contract size and the leverage that you are gaining from before you proceed to trade in, right? So how do we calculate the P&L for micro DAX futures? Right. For example, if I were to buy these micro DAX futures at 16,000 points, and then I subsequently sell it at 16,100, right? So meaning I make a profit. So my profit calculation is 16,100 minus 16,000. My sell price minus my purchase price multiplied by €1. So that is equal to euro $100 per lot, right? Or per contract, right? So but suppose that this trade is a losing trade. So I bought at 16,000, I sold at 15,900. So I use the selling price 15,900 minus 16,000 multiplied by €1. So then I have a loss of euro $100 per contract, right? So each minimum price fluctuation is also referred to as one tick. So this is how traders then refer to how much they make or lose whenever they talk to each other, right? They may not be telling in dollar values. They just say that I make 100 tick profit, I make 100 tick loss, right? So in that case, 100 tick profit is 100 ticks times euro $1, so which is equal to euro $100 per lot or per contract. Okay. Of course, in this short webinar, I'm not going to be able to cover everything. So if there's any questions that you have, feel free to drop them. I'll try to answer them, or you can also chat back with us after the webinar. So let's continue here. I'm just going to share about what are factors influencing DAX index, right? So DAX, or rather Germany, is part of the European Union, right? So the macroeconomic factors plays a very big part, especially the macroeconomic factors that affects the European Union, right? So even though you're trading a stock index that is predominantly Germany company, but because of the outsized influence that Germany has on its immediate neighbors, so whatever that is happening in that region is going to have an impact on the result of this DAX index as well. So it does it's good to pay attention to what is going around, right? Especially the other bigger economies like France and Italy. And even though United Kingdom has exited from the European Union, but it used to be part of them, and it's still a very a major economy in that region. So also these are the few another country or the economic situation that we need to pay attention to, which will have a influence or impact on the Germany economy and thus the Germany stock index. Right. So also understanding Germany's exports, how the economy grew, what products they sell, who they sell it to, right? So this will have an impact on how you then go about structuring your strategy, right, in analyzing the index, right? So for example, we know that Germany major trading partners is US, China, and then subsequently followed by the rest of the European Union countries, right? So the currency has changed in that sense, if you look at it this way, meaning that the Euro USD will definitely be a significant impact, right? How the currency move is going to have a significant impact on the state of the economy and thus also on the stock index itself. So, so even though we are trading, in fact, a lot of time I propose don't just look at one asset, right? Intermarket analysis is a very important component or rather a very important factor in influencing how well we do, right, for our in our trading strategy, right? So we cannot be just too singly focused on one product. Like if you trade DAX, you just look at DAX, you don't look at anything else. No, we need to look at all other factors impact that can possibly impact it, and then from those other factors you will then be able to derive a strategy that will be more foolproof, right? And apart from these trading partners, we also know that from this chart itself that Germany's major products, right? If you can see, if you can see um, the icons and the words written here, you know, you have motor cars, medication, machine parts, and so on and so forth. So all these, right, you can then zoom in and know that manufacturing is a major component of its export, right? Things that they manufacture, right, in their country, right? So therefore, we want to pay attention to how the manufacturing has been doing. So then all this will also makes more sense later on as I touch on the strategy. Yeah, I'm going to show you why we are looking at this and how it can then impact the movement of the stock index. Okay, so understanding the stock index, we know we cannot look at the stock index as, I mean, of course, it is a single product, right? Which is what I mentioned just now, is make it easy for us to trade, right? But we also need to understand that it is made out of hundreds, or it made out of 30, made out of 40, depending on what index you're looking at. It's made out of many individual stocks, many individual companies, right? So in this, each and every one of these individual companies, they have their own dynamic, have their own growth trajectory. So we need to understand all of them, but if we can pick up those few stock, those few company that has an outsized influence or outsized weightage on the DAX index, right? And if we can just pay attention to these few stocks, that will also help us, right, in understanding, right, the performance of the stock index. So for example, DAX 30 is made out of 30 individual Germany stocks, right? But you need not look at all 30 of them. In fact, the top 10 of them, right, they are listed here, right? Their weightage together made out of 60%, right? Top 10 of these stocks in the 30 DAX 30, right, make out of 60% of the weightage, right? So meaning that all these top 10 stocks that are listed here, how they move, whether they go up or down, the news that's impacting them, the technology trend that these companies are in, and how you influence, that will then cause an outsized influence, right, in the direction that the DAX 30 will move in. Right. So with that, okay, let's talk about how we can then develop a trading strategy out of trading the micro DAX futures, right? So just before I proceed, so I just a quick uh, summary, right? So the approach that I'm going to take is something like a top-down approach, right? So we'll go by the general economy as a whole, then slowly zoom in to the stocks that is composed of DAX futures, and then we we then go into the futures itself, the futures movement, and also on the charting and technical analysis, right? So all these can be used together, or it can be also used individually. So a lot also depend on the type of traders you are or we are, right? So whether are we trader, a short-term trader, or are we a positional long-term trader? So that will then influence the information that we need, or the information that we focus on. So typically, a more long-term trader or long-term investor will need to pay more attention to macroeconomics. We need to pay more attention to the financial states of the companies, whereas a short-term trader probably will pay more attention on the technical charting aspect, on the price actions aspect, and less attention on the macro. But not so also less attention doesn't mean no attention. We still need to pay attention to them, because from those macro movement, we will be able to also help to derive on our short-term strategy. But just that we don't need to pay too much attention to it. That's all. That's what I'm saying. Okay, so top-down approach. Let's start off with macroeconomic analysis. Okay, as I mentioned, the Germany's major trading partners are the US, China, and then follow on by its immediate neighbors, the European countries. But if you consider the European countries as a block, right, as an individual group, then that itself has an outsized impact, right? Meaning that if I am, for example, if we are the finance minister of the Germany, then we know that and whatever policies that the European Union make as one, so that will have an outsized impact on the state of the economy, much more so than whatever that is happening in the US or whatever that is happening in China, right? Because of just that the weightage that it occupies as a trading partners, right? So this particular index itself, or this particular data, right, is being compiled by this institute called the IFO Institute. So basically, they on I think it's on a monthly basis. They will do a survey with like few thousand businesses all across Germany, and then they will collate their survey to form a business development expectation. So meaning that if these business owners are bullish about the economy, or these business owners, they think that the economy will do well because of what their businesses is going through, because of what their customers are telling them, right? Then they will give off a more optimistic figure, right? And then this particular index will then start to rise up, right? It's month by month, they're getting more optimistic, right? So, but if the business owners are getting very pessimistic, right, because wars happening, because inflation, because the cost of doing business has risen, but the revenue is not going as much, so then they'll be more pessimistic, and then they will give off a more pessimistic result in the survey, which will then cause the indicator to go down, right? So you can see, right, I hope you can see by now that you can see that this particular business expectation index, right, tracks very closely to the DAX futures index. And not just track closely, if you can notice it, that it almost always peaks, right, before it turns down before the DAX index turns down by probably about 6 months to 12 months, right? So it will turns down 6 months to 12 months later, the DAX index turns down. Over here, it turns down, then 6 to 12 months later, the DAX index turns down. Here is probably about 3 months, right? Here is pretty similar, and we know what happened here. COVID happened, right? But um, I mean, nobody expects it, right? So it did not give a very early warning. But even then, if you look back, right, the expectation has been going down way back since 2018. So from 2018 until the low in 2020, the business expectation has been very pessimistic, right? So over here as well, in 2021, it peaked, right, before the DAX index. And look at what we are seeing now, right? In early 2023, the business expectation also has peaked, and is going down, but the DAX index is still going up, right? So that, of course, then give us a warning, right? Early warning sign that, oh, perhaps even though the index is doing well, but I may need to be prepared for the things to get worse later on, as being forecasted by this IFO business development expectation indicator, right? So, and this is based on survey done with the business owners, right? Another interesting thing is that even though they give off very early warning, right, before the stock index tank, they did not really give off a very early warning, right, during the bull market, or the bottom of the bull, or start of the bull market. You almost start at the same time, right? You almost bottom at the same time as the index itself, right? Right. I'm no psychologist, but I think that probably some form of psychologists can explain this phenomena, right? Probably this fear is a much more stronger indication, right, than greed, right? So perhaps that could be the reason why. But nevertheless, we see this phenomena and we can use this information to help to plan our trades going ahead, right? Okay, next, I mentioned also that one of the major component to the Germany's economy is in their manufacturing exports. So thereby, this Germany manufacturing PMI, PMI stands for Purchasing Manager Index. So it's just how much the businesses purchase. So during a growth period, businesses will buy more machineries or products because they are growing. So then this line will go up. So similarly, we can also see that there's some trends here that the PMI like almost will peak about the same time or slightly like maybe just 2 or 3 months or even 6 months earlier than the index itself, right? So it is much more in tune with the stock index. But together with the IFO business expectation index, these two also give us some early warnings in terms of preparing ourselves for the bear market, right? So basically, the Germany PMI hasn't been doing well since 2021. It's still been trending down, but we see a different picture, right, with the DAX that is going up, right? So I think that in a sense give us a warning that things may not be doing too well going forward for the DAX index. Of course, there may be other factors, right? We're only looking at these two factors. There may be other factors in play. If you this makes what makes trading so interesting, right? By not just looking at the chart, looking at the price moving up and down, but by studying all these economic factors, all these reasons, we're able to try to beat the market, right? To try to achieve a better result. Next, financial analysis. Okay, financial analysis is very common, right? When we invest in stocks, right? We want to know what the stock is doing and how well is whether the stock is overvalued or undervalued, right? But if you think about it, but when it comes to investing in stock index, how do we value it? How do we look at the finance? There's no financials to look at. There's no balance sheet, even though it's made out of 30 stocks. But we cannot just add all the assets together, add all the liabilities together, add all the profits together, and then analyze it, right? It doesn't work this way, right? So the next thing I'm going to introduce is an interesting concept, right? It is by even though I mentioned that the top 10 stocks weighs about as in it has a total weightage of 60% of the DAX index, but we want to not all of them are significant, right? Because if you want to study them, we want to look at their correlation, the relationship in the price movement to DAX itself. So this table here, basically I've studied on the correlation between these top 10 stocks, right, in the DAX index, and against a DAX, the correlation of these stocks against DAX over a 1 to 5 years period, right? So you can see here that at different time period, there are some stocks that has a high correlation, some stock has a low correlation, like 27%. If you look at this Bayer AG over a 3 years period, right? But so most of them are not very consistent except this Siemens AG, right? Whether you look at 1 year, 2 years, 3 years, 4 years, or 5 years, right? I did not show here, but I also look at 10 years, up to 10 years, it is still at a high 80% correlation. So basically Siemens AG, right, is pretty correlated, right, to the DAX index. So even though I cannot analyze the financial state of this DAX index, I can analyze Siemens, right? I can analyze its P&L, I can analyze its balance sheet, I can analyze Siemens valuation. And of course, if you work in the finance industry, you have access to Bloomberg, you can also try to go and extract information about the PE ratio, about the PB ratio of DAX itself. But for most people or most investors, most retail traders, we don't have access to such a platform. So but we have access to Siemens AG, right? By referring to Google Finance or Yahoo Finance, you can easily get access to their financial information. So now that we know that this Siemens AG is very correlated to DAX index, we can actually use it as another form of analysis, financial analysis on the DAX itself. And I'll show you how. Okay, so basically this shows a pictorial comparison between DAX, the one in red, and Siemens AG since 1993 to 2023. So that's like over the past 30 years, you can see that the correlation is very, very close, right? They move very much in tandem to each other, right? So with that, we then know that, okay, by understanding Siemens valuation, that will help me to understand how the DAX valuation is going to be. So this chart here, it shows a monthly chart of DAX on top, right? On top is DAX, but below is a financial information on Siemens, right? The one in the middle, the blue line, is a price to book ratio for Siemens AG, right? And the indicator below, this is my own indicator that I create, right, for measuring. I call it the PB cycle index, meaning price to book cycle index. So basically what I did is I uses the data of the price to book ratio, and then I normalize it, right? Because if you notice it, like this price to book ratio moves in an uptrend, right? It's circulating, oscillating within this channel that I've plotted out, but is closely going up. So in the past, the price to book ratio is like 2009. It's trading at maybe 1.2 times, and it's considered okay, right? But now it hardly can go down to 1.2 times, right? In the recent sell down, it goes down not even 1.5 times, and then it bounced back up. So basically, the market for some reason is able to accept a higher valuation for this stock, right? he used to only accept it as as being undervalued when it's at 1.2 times. But now, no, they don't wait for it to be 1.2 times. They don't even wait for it to be 1.5. Before it reach 1.5 times, the buyers already comes in to buy it up. So that is a reason why we need to normalize it in order to be able to see it in an oscillation way, right? But of course, if you don't have this, because this is an indicator that I created myself, if you don't have access to this, by just looking at the price to book ratio, you can also try to draw up this channel, and then from there you'll be able to somehow do your own normalization, because whenever the indicator or whether this valuation drops down to the lower band of the channel, then you know that it's approaching to this oversold region, or is approaching the attractive region. Whenever it's trading at a high region, then it's approaching a not so attractive region, right? So basically that's how you then able to use this as a way to value the DAX itself, right? So for example, I plotted down here all the dotted line and the up arrow. Every time it falls to the oversold region, right, it's actually a good buy point for the DAX index, a good buy point. I'm sorry, I thought I'm using the spotlight, right? Every time it falls below here, it's a good buy point for the DAX index. It falls below, it's a good buy point for the DAX index. So whenever you see if it falls below, then you know that you are getting ready, right? But the opposite may not be true, because whenever it goes up to the above it, it doesn't mean that you need to sell, because you need to know that stocks, or even stocks and stocks index, they are biased to the upside, because in the long term, the stocks and stocks index, especially stocks that is doing well, that is constantly growing and making money, in the long term, the price will go up. So the stock index, right, composed of all these stocks as well, will be performing the same way, right? In the long term, they're going to go up. So such valuation technique, right, is very good at picking up a buy point, but not so good at picking up the sell point, right? When picking up the sell point, it's much better to follow the macroeconomic condition, right, which is the one that I used previously, right, on all this macro data, economic data, right, to be able to alert yourself on when to sell. For when to buy, if you use the financial ratio such as this, price to book as a valuation technique, is much more useful, right? So apart from price to book, you can also use price to sales and price to earnings. But personally, for index itself, I prefer price to book. Especially price to earnings is very volatile. Right? Companies' earnings can can fluctuate quite wildly, right? Maybe in a particular year, they need to invest heavily in machineries to upgrade their factories. Then they're going to spend a lot, and their earnings is going to drop, right? But that by no means that the company is not doing well. So, but if you're looking at the price to earnings, or looking at earnings itself as a valuation, then you will have such a problem whereby, hey, the earnings not doing well, but the stock price is going up, and that's because the company is investing right? So that's my preference. Okay, so next, going a step down in our focus, we then look at the market strength analysis, right? I only have one indicator to introduce, and this indicator is called accumulation distribution indicator, right? This indicator is easily found in all charting software. If you use our Phillip Nova charting software, you will find this indicator available, right? So basically, why I like this indicator, because this indicator takes into consideration price movement plus the volume, right? So volume makes a very important volume is a very important ingredient, right, to the price trend. A price that is trending up with low volume is by no means comparable to another with a price that's going up with a high volume. So a lot of traders pay too much attention on the price itself and not enough attention to volume. So by using indicators such as this, accumulation distribution indicator, which incorporate volume into it. And also another unique thing about this accumulation distribution indicator is that it also incorporate the intraday movement, right? Intraday movement is very important as well for any particular instrument, right? So how to use this, right? It is this is a type of market breadth, or rather market strength indicator. So it tells you how strong the trend is, how strong the market is. So usually in this situation, when you see something opposite happen, like for example, you see that the trend is coming down, but this indicator is going up, right? So then this indicate that, okay, this trend may be ending soon, right? You'll reach a point whereby the trend will end and then you'll flip up. So here also, it forms a higher high, but here at the same time period, it forms a lower high. Here again, higher high, lower high, higher high, lower high, right? Lower low, higher low, right? So you know this is what we call divergence. So when you see a divergence between the price and the indicator, right, then you know that, hey, the strength is lacking, right? So the trend may change soon, right? So you can then get yourself prepared. Of course, when you first see, you don't immediately go and jump in, right? Go and take the opposite trade, right? You still need to look for the timing. The timing you can use either some indicator like MACD, stochastic, or candlestick formation, or just pure price action can be used as well, right? On top of that, by just using this as an indication, telling you when it is ending, plus all this timing tool, will help to improve your trading to be more accurate, to be more concise in catching the right trend. Okay, so last of all, trend analysis. So okay, just some theories. I'm not going to cover them. So basically, this is what we call price action. So downtrend is when we form a lower low, lower low than the previous low, and a high, lower high than the previous high. So then when the downtrend stops and move to an uptrend, firstly, it stops going lower, and then it forms a higher low, and then it breaks the previous high. So then it then start forming higher highs and higher low. So then this part here is what we call an uptrend. So as a trader, I want you to know that your trend is your friend. Don't trade against the trend, right? So when the market is in a downtrend, you don't go and trade the opposite side, right? Then when the uptrend is an uptrend, similarly, don't go and try to short it. So this is just similarly the reverse side, market that is going up from a higher high, higher low, from an uptrend to a downtrend, and keep on forming lower low and lower high. Okay, so I said I want to share about these trend following strategies. I don't have much time left, so I'm just going to rush through a little bit. But this strategy is very simple, right? It's basically a moving average strategy, right? But this strategy is tested on the DAX itself, and is tested to work over the past 20 odd years, right? By just following this simple technique of moving a fast moving average crossing a lower moving average, right? But the parameters is not so conventional. Basically, the short moving average, which is the one in the orange line, right, is a 20-day moving average, 20-day moving average. The long one, the one in green, is a 200-day moving average. So you can see that by the fact that we're looking at this 200-day moving average, right, it takes a while, right, for the fast line to cross the low. So that is good in the sense that it helps us capture a very long-term trend, right? But of course, you may not be so good whenever we meet across situation like this, whereby we have multiple crossover, or we call whipsaw, right? Because of the long waiting time, you got to wait for it. By the time we cross over, right, you may end up have to sell or at a much higher loss than what you desire. So you cannot have it perfect both ways. You want to capture a long-term trend, sometimes you just got to give them allowance to move, right? For example, here for example here, all this fluctuation, right? A huge sharp drop down, right? I'm sure the trader who bought it here would be scared, right? Because when he dropped down here, he still haven't got his sell signal yet. But of course, because he didn't get his sell signal and because he followed the rules, the market rebound up, and continue the uptrend. So that's the upside of such indicator. So the downside is of course, like when the whipsaw happen, then or when the signal finally come, then you end up selling at a deeper loss. Right. So this strategy tested since 1992 for about 30 years. So over these 30 years, it has total 17 trades, right? Not many trades, right? Because it's a long-term trend, right? The total number of losing trades is 26. So the total percentage profitable is about close to 40%, meaning out of 10 trades, you got 4 good trades and 6 losing trades. And the profit factor is 2 times, meaning that for the entire period of this trading, right, a trader who started off with say 10K would have probably made about 20K profits from there. So his equity probably about 30K now, right? But if you notice this thing, interestingly, you can see the shorts are not so good, right? The shorts has more losing trade than long losing trades. So thereby this gives us an idea. Well, of course, this phenomena is very common. Whenever you analyze stocks or stock index, you're always going to get more winning trades in the long side than the short side, because in the long term, right, those stocks index will perform well, will go up in the long term, because the companies that they're composed of are mostly the blue chips companies, those companies that will tend to do well, tend to make profits, right? So if we were to we use this strategy, but we eliminate the short, meaning I don't take the short trades, I only take the long trades, then my results improve tremendously. So out of the total number of trades, I've got 11 winning trades, 10 losing trades. My percentage profitable becomes 52%, which is very high for a trend trading strategy. Typically, for a trend trading strategy, if you get a winning percentage more than 30%, it is a very good strategy, right? And the profit factor is even much better, 3.6 times, right? So that is by eliminating the short, meaning whenever it crosses up, I buy. It cross down, I will just exit my long, but I will not go short, right, for this strategy. Does it mean that we can't short DAX, right? No, right? I'm just telling you this is the strategy. If you want to maximize your gain, this is how you should do it. You can still do shorts. Remember, just now I went through all those analysis is to help you to make the short trades if you need. So next step is how we put them all together, all this analysis, right? So 2 steps. First steps is the market condition. So how do we analyze the market condition? We analyze it by looking at the financials ratio, the PB ratio. Okay, the PB cycle index, I just put that here for your reference, but just gonna assume that you don't have this, of course. Then so you will definitely have access to this price to book ratio from all the financials websites, right? So you just need to plot out the trend, right? So just need the trend meaning not be flat, right? It can be upward sloping, or some may even be downward sloping, right? So it all depends on what instrument you are looking at. And then also you look at the 2 macroeconomic indicators, the Germany business development expectation and the manufacturing PMI. So I'm going to use the PB ratio as a buy signal. I'm going to use these 2 in conjunction as my sell signal. I mean a sell zone. Not buy. I don't mean that if you immediately see here you go and buy, right? But you alert yourself. Okay, now is the time. Now is the time. Now is the time. The blue line. Now is the time to look to buy. The red line, because the 2 indicator is trending down, now is the time to look to sell. You can now, of course, proceed to the daily chart by using the price action that I've shown you, and also by including the accumulation distribution indicator, you can then pick up the optimal buy-sell levels. So here, right, sell signal, so look to sell. Of course, the sell happens a while later, didn't go down too much. Here, by looking at the Siemens price to book ratio, we have a buy signal, right? So on and so forth. So now, of course, the price to book ratio is trading at a high, right? And then, but we have these two macro indicator that is going down. So now the market condition for DAX is actually in the sell zone. Again, I want to reiterate, doesn't mean that we go and sell right now, but we should be on a lookout. If you have a position, you may want to tighten your stop or reduce your position sizing. If you don't have a position, just get ready for a sell signal, right? So next, we are just now we look at the market condition. Next, we look at the trading condition. So for the trading condition, you can use accumulation distribution indicator to help spot out, right, the trading condition. Okay, this green box here that I've shown you, I'm just trying to show you how to use this in conjunction. So the green box that I've shown you is this blue dotted line here, right, whereby we have the PB in the oversold region, PB in the buy region. So the blue line dotted here. So this period of time, I think somewhere September last year, right, whereby we have a market condition says buy, right? Then what do? We then look at the daily chart and we can look at the accumulation distribution, right? So the market condition buy. So now we have the trading condition. The index comes down, but the accumulation distribution indicator forms a higher low. So it's a divergence. So divergence means that, oh, even more interesting. Now it's a time to buy, to look to buy. Then by whatever methods you use, right? If I wait for the moving average only cross over here. But you can actually buy somewhere around here because look at these purple lines here. These purple lines are drawn for you by this indicator called zigzag, right? Most charting software has this indicator called zigzag. It plots out for you the impulse and the corrective wave for you, right? So you need not plot out yourself. And so by seeing this, there's a price action. So market condition just now is buy. Trading condition also buy because of the divergence here. And then we see a higher low form here, goes up when it breaks the high here, somewhere when it breaks the high here, which is somewhere these two bars, right? So that's where you get your buy signal, right? Because we have the market condition, check, trading condition, check, buy signal, timing, check, can go ahead to, as a trader, probably they can go ahead to buy this. Then of course, you got to control your risk by setting the stop loss level and don't over trade, position sizing, so on and so forth. Okay, so how do you benefit, right? If let's say you can join us as a Phillip client, how can you benefit? Firstly, for my services, I do provide in-depth research sometimes sent to my clients on these various asset classes, but more actively on a WhatsApp basis. These are the WhatsApp services I send to clients who open account with me. Depending on what accounts they open, what products they trade in, they can then subscribe to all these 6 WhatsApp service. So for my futures trading client, they can then subscribe to the futures trading opportunities. So on and off, when I see the trading opportunities, or through those some of the customized indicators that I use, I will then send it to my clients to alert them to look out for the market movement, right? So apart from my service, Phillip also has some ongoing promotion that can help you in your trading. So this particular promotion is for the Micro DAX Index from now until 31st of August. If you trade Micro DAX Index or the Micro Euro Stocks 50 Index, is zero commission. So zero commission per site per lot, right? Is placed on online. So it's capped at the first 100 lots on the micro contracts, on these 2 micro contracts only. So it comes in a form of rebate. So if you were to trade, you will still see that the commission of 1.50 euro per lot being charged. But at the end of the promotion period, Phillip will then rebate back to you those trades that you've done up to 100 lots. So 100 lots, when you, let's say, buy, sell today, is considered 2 lots, right? Yeah, and so non-professional customer are entitled to free market data for the UREX on the Phillip Nova trading platform. And also we have ongoing this 40th anniversary. This year is our 40th anniversary. So if you were to open an account, this is our coming promotion for 1st of August onwards. Now we are still at the end of the July. The end of July, the gift for account opening is this Netflix subscription, but this is much better, right, on this Nespresso coffee machine. So if you were to open an account on the 1st of August, and for the first 40 eligible clients, and then you fund in $4,000 into the account, you are entitled to win this gift from us. So apart from this, we also have other ongoing promotions. Okay, so yes, again, my name is Eric. This is my contact. You can take note of my QR code, scan in, and my email, my LinkedIn profile, and my website is here. Okay, so come to the end of today's session. Thank you for your time. Let me just look at the questions. Okay, somebody asked if we have a demo account. I think we do have a demo account for our Phillip Nova, but this demo account is more for you to familiarize with the platform. It doesn't have those demo trading function, right? So I do provide coaching. Somebody asked whether I do provide coaching and whether it's free. Yes, I do provide coaching, one-to-one coaching, whether on face-to-face or whether on Zoom. And yeah, for those who are interested. Okay, another question, do you have trade winners and losers on money trades using DAX and Siemens indicators? I suppose you're asking for examples, right? No, I do not have examples on the positive and losing trades, right? Using these Siemens indicators, right? So generally speaking, because I have access to Bloomberg, generally I will actually use Bloomberg to check out the valuations of the stock index. And but I'm introducing this Siemens as an alternative, more for individual traders and investors out there who don't have access to the Bloomberg station, and then you can then use this as a proxy. Right, it's a pretty good proxy due to its high correlation. Okay, I do not offer daily trading signal service. Somebody asked, but what I do is that on and off, when I see a signal, I will send it to my client. Right, not on a daily basis, because personally, if you are daily basis, you are referring to more on intraday trading, that will be quite difficult because the market actually move quite fast. So I look at it more on a swing trading methods. So meaning that over a period of, say, 2 weeks to possibly 2 months, right? So it all depends on whether there's a trend or not. Personally, I focus a lot more on the S&P 500 and the MSCI Singapore index. For other exchanges, or rather other stock index futures or other commodities, it is more on a hot basis, as and when whenever I come across them, then I will send it up, right? But on a more regular basis, my focus is a lot more on the S&P 500 and the MSCI Singapore, right? And you can actually find that just now I showed on the correlation table, even for S&P 500 index is pretty correlated to the DAX. So they are more or less quite in tune. They move quite together, right? How long is the trade for trend you mentioned? Are you referring to the, I assume you're referring to the moving average? The moving average for the this 20 MA crossing over 200. If you're referring to that, I think the average is pretty long. About could be average is about 100 over days, 150 or 160 around there, right? But on more on a trading basis, actually very few people really trade futures that long term. So okay, maybe let me just go back. Just bear with me. Okay, but you can actually use the moving average in conjunction with this accumulation distribution indicator for short-term trades. What do I mean by that? For example, here the market, it has crossed down, right? The moving average has crossed down, so it's a downtrend. But remember I mentioned that this on a long-term basis, the statistic doesn't work so well for the short trades. It works better on a long trade. But if you look at this, right, even in a short trade, right, it doesn't go down, like it's just zigzag down. So while it's zigzagging, right, you will be able to use the divergence, right, here to look to sell, right, because it's a downtrend. So divergence, look to sell. Downtrend, divergence, look to sell. It's still downtrend here, divergence, look to sell, right? You get what I mean? Right, then of course here, then why do we look to buy is because the market condition, remember we refer to the market condition, the PB was in the buy zone, therefore we then switch back here and then we see this. So even before the moving average cross, we already can be able to get a signal as the market condition is PB giving us that market is ready to go up, right? So once the moving average turns up, then opposite can happen, right? The correct now here you have a divergence in accumulation, the distribution with the price, you can look to buy. Here again, divergence, you look to buy. So you get me? So there's no divergence here. Oh, in fact, there's a divergence here, right? You remember, see here, the low is lower than this low, but this low is higher than this low. So there's a divergence here. So any traders who have caught this can possibly look to buy. So when you're using a daily chart like this to look to buy, you can either wait for this kind of consolidation, breakout of the consolidation pattern to buy, or you can switch to a lower time frame chart like a 4-hourly or hourly chart to look to buy. Here again, we have a consolidation breakout, buy. Here, not much yet. Maybe it's still forming, right? It looks like there's some consolidation pattern in this case, right? So that's what I meant, right? Okay, so for this case, right, if you're trading this way, then the time period is short, right? It could be just 2 weeks or 3 weeks, or maybe even like less than a week. It all depends, right, on the market. So, but basically, as a trader, if you buy, you want it, as long as there's no sell signal, you want it to run, right, as long as possible. So that means that because time is a deciding factor of how much profit you have, right? The longer it runs, the more it runs, means the higher the profits you get, right? Because you're in the right side of the trend. Okay, okay, somebody else, how to add on WhatsApp message to inform entry. Okay, so this is WhatsApp message is for my clients only. So you need to open a trading account to be my client. Then you can subscribe to my WhatsApp services, right? So Let me just go back to the slides. Okay, so thank you for your time. That's all the time we have for today. Thank you so much for being a wonderful audience for tonight's webinar. A link to the recording of this webinar will be made available in our follow-up email tomorrow. If you have any query on the webinar or would like to get started, simply reply to our email and we will get in touch with you. Right, this is Eric Lee signing off. Have a good evening. Thank you.